Hi, it's Nick Burke here again from Property for Profit. Congratulations. You've decided to find out how to get not one, but two National Rental Affordability Scheme payments on one property. That's $200,000 in tax-free money from the government over 10 years. Very few people know about this, but there are investors who are cashing in on this right now. Now, it's not illegal or immoral. It's not a trick or a loophole. It's just a fully legitimate government-approved incentive that hardly anyone knows about. Even most sophisticated investors who know about NRAS already. And by the way, if you're unfamiliar with NRAS, just email us and we'll send you all the information you need to know about this lucrative scheme. The nuts and bolts of it, very briefly, are this. Firstly, you drop your rent by between 20 and 30% on a new property. And you get $100,000 tax-free from the government for your trouble over 10 years, which is $10,000 per year. We're using rough figures. It's actually more than this, but we'll be conservative and use round figures. You rent it to a key worker, so not a millionaire, not someone on welfare, just someone who's employed and comes somewhere in between. But if you want to get double this and get $200,000 tax-free paid over the same 10 years on one property, then there are 6 criteria that you need to know. So let's have a look at each of them. Firstly, it goes without saying that the property needs to be NRAS compliant. This means that it needs to be new, not lived in before. It needs to be in an area that the government has determined there is a need. And it needs to be from a developer who's been approved to create a certain number of new NRAS dwellings for the market. And the rent needs to be discounted by the 20, 25 or 30%. This is the basics, and there are a few more criteria associated with NRAS, but we won't go into them in any more detail just here. And you'll know straight away anyway when you're looking at a particular property, because whoever is selling it will be able to tell you. Specifically, to get 2 NRAS payments, there needs to be 2 separate lockable entrances, so that each tenant can go into their property without needing to go through someone else's property. So for instance, a granny flat where you need to go through a lounge room of the house to get to it would not be eligible for NRAS. Each property needs to have its own bathroom, and each one needs to have its own kitchen. Each one needs to have its own bedroom, and each one needs to have its own living space. It doesn't need to have its own laundry, but this can be shared. Be careful buying properties with shared laundries, not for the sake of their NRAS compliance, but because properties with shared laundries probably won't be the ones that are going to accumulate the best in value and achieve you the best capital growth. So stay focused on the capital growth and regard the NRAS payments as just a way of making the properties cash flow neutral, or in the case of these double NRAS properties, making them considerably cash flow positive, whilst over the long term your properties are expected, of course, to rise in value. Shared garden, barbecue and recreation facilities are okay. This is mostly relevant for townhouses and apartment complexes. So what does this mean your options are? Well, it means you have 3 options. There are 3 possible ways you can get a double NRAS payment. Firstly, with a granny flat, which meets these conditions. Secondly, a duplex that meets these conditions. And thirdly, a dual key apartment that meets these conditions. Now, a word of warning on each of them before you go and rush off and buy one of these and expect a double NRAS payment. Be careful firstly with granny flats, because in many areas you're not allowed to build them, and in other areas you're only allowed to rent them to family members, so this would mean they wouldn't be NRAS compliant. Exercise caution with duplexes as well. You want to make sure you're not paying too much for them. They can easily be 600 to 800,000 or even more in a lot of areas. And also some of them are being built in not such good areas, and so it can often be a fine line between balancing these 2 factors. Lastly, we have dual key apartments. Some caution needs to be exercised with these as well. Most dual key apartments are in holiday resorts, so they're for short-term accommodation, so that makes them unsuitable for NRAS. And usually the configuration is a 1-bedroom apartment on one side with a motel room on the other side with 2 separate entrances and a wall down the middle. Now, I wouldn't buy one like that because a motel room is not really going to attract a good long-term tenant, and motel rooms don't usually have their own kitchen facilities, so that wouldn't make them suitable for NRAS anyway. But there are configurations in each of these 3 options that if you select carefully, you will get a double NRAS payment. Here at Property for Profit, we have a 21-point criteria we use to assess double NRAS properties. We then go out and search double NRAS properties that meet these criteria. Let me tell you, NRAS properties are pretty rare. more than 99% of all new properties that are sold don't meet the NRAS criteria. Of the remaining 1% that do, 99% or more of those have only one NRAS entitlement on them. So properties with a double NRAS entitlement are very rare indeed. Then when we apply our 21-point filter, it refines these properties even further. In fact, at any one time, there's only ever a maximum of a handful of properties that meet these criteria in the whole of Australia. Sometimes there are none, and our customers who want one have to wait. So what we've developed is a process that will enable investors who are interested in securing one of these properties to be able to get access to them. If you're interested in finding out if a double NRAS property is right for you, just put your details in the box to the right of your screen. What's going to happen is one of our specialist double NRAS consultants will be in touch with you and will talk to you about how one of these properties may suit you. They'll start by making sure you can get finance that you need to buy one of these properties, and then they'll help you to work out the cash flows so you can see exactly how much your positive cash flow will be in addition to the capital growth that you can expect. We'll run your numbers through our software, your personal numbers, to work out how cash flow positive a particular property will be for your particular circumstances. This is one example. You may not be able to read the numbers on the screen there, but this is one example for a particular property for a particular client recently, and the result in this case is a first year positive cash flow of $9,632. It climbs into years 2, 3 and 4 and beyond. If you think one of these properties may be out of your reach, you may be surprised. We have single NRAS properties on which the cash flows are almost as high, starting from even less than $300,000. So put your details in the box to the right and we'll get started.